The main focus has been on the formation of a double top that presents a slight decline. Concentrating around these levels, avoiding a downtrend acceleration only becomes more realistic once the chart keeps closing above 215, for a return back up to 250 by the start of next week. Then in this less likely scenario, price keeps closing back into the double top range for another attempt at new highs beginning in March. So in the immediate future, even if there are strong upswings, stronger resistance begins as low as 240, which would resume a delayed downtrend on the second fib fan line. Now, if everything goes according to bearish plan and the double top reversal continues to drop, according to ideal Fibonacci proportions, price keeps dropping towards the 180 area where the edge of the circle intersects with the retracement level near the end of the month to produce a healthy correction that can increase the chances of a decent rebound back towards the double top range, where resistance can still be stronger into the first 2 weeks of March.